Hi everyone, this is GD back again, and today I want to cover an ETF. So far, I have covered the analysis on individual stocks like HC, Alibaba, QSR, etc. But I do hold some of the ETFs as well, some of the very good Vanguard ETFs as well. I'm a very big Vanguard fan because of their expense ratio, low expense ratio, and some of the ETF I buy is because I want to diversify, right? I like certain sector in which I would like to diversify my holdings and not just hold one stock. And so one of that sector is a real estate investment trust. So today we will analyze Vanguard REIT VNQ, which is basically portfolio of real estate investment trust. So what are REITs? REITs are basically the companies which distributes their profits, 80%, 90% of their profits to their shareholders in a form of dividend. So they don't have to pay taxes on that, and we get charged the dividend and we pay taxes on that. But you get like 80% of the cash flow, 90% of cash flow for this REIT. So the VNQ and some other REITs I hold, or some other ETF I hold, is basically for dividend purposes. I want certain incomes to come to me like every quarter, and I like the good dividend yield ETFs, and VNQ is one of them. So VNQ dividend yield is 4.1%, which is very good compared to the current market environment. So let's go through the VNQ. Some of the catalyst I have listed here. So first is it holds majority of REITs belonging to cell phone towers, which is high growth area for the next decade. And this is going to get accelerated. If you see VNQ, right, and we'll go to Yahoo Finance. If you see VNQ, it's basically actually traded around $90 start of the year, and it has fallen like around $76 now. So it's basically fallen around 15 to 20%. And the companies which it is holding, right, it has not stopped growing. It's going to actually even grow with this COVID pandemic, because all the digital sales are going to increase, the internet usage is going to increase, right? So what happens is, the more of the data usage, internet usage, more of the cell phone towers benefit. So VNQ, actually, if you see the holdings, majority of it is owned by, majority of the holdings are from the cell phone towers business. So AMT, then you have SBSC, you have Crown Castle International, American Tower, and things like that. It does hold some of the warehouse REITs as well, which is also kind of a high growth area. With this pandemic, it's more of the internet. We all are sitting here and at home, and then we more and more use the internet. I just upgraded my internet from around 50 MB or 60 MB to around 100 MB. So because I'm using more and more data, so that's why. I mean, some of you guys might be even upgrading from 100 MB to 1 GB based on your usage. So that's a catalyst for this particular ETF. So it has multiple tailwinds, right? I mean, if you go forward, look at the decade, and here I want to kind of emphasize Peter Lynch style as well, where Peter Lynch says, just look around what's happening around you, and which companies can benefit out of that, right? So many of these companies are going to benefit out of this, because why? More online sales. Everybody is buying through Amazon, HC, and I have done a video on HC and explain. Please look at that video. I gave detailed analysis, that how HC is growing. That's one of the trigger. Second is, we all are sitting at home, we are not meeting each other, so we all are doing like personal calls through FaceTime, WhatsApp call, things like that. And for office calls, we are using WebEx or Zoom. So it's basically what's going to happen is going to consume more and more data. More online gaming is happening, through Xbox or PS4, or it's everybody's playing games online. That's taking a lot of data. Gaming needs a lot of data. So that's one other catalyst. And everybody's watching Netflix, and the cord cutting is happening. So Netflix, Disney, etc., which again is a video consumption. YouTube consumption, it takes a lot of data. So the data usage is going to just increase in the next decade rather than decrease, right? I mean, and it's going to increase exponentially because mostly people will work from home. People will watch online TV, people will watch, play games, do the video calls. So it's definitely going to increase, and because of this, the REITs, the American towers, and Crown Castle is going to benefit. I'll get to that, what they do and what is their business, once I go to Yahoo Finance and some other stuff, Vanguard, and I'll explain the business also behind that. And VNQ has a very good dividend yield, so 4%. This is excellent. When you see US 10-year treasury bonds, which is considered safest of the instruments, it's 0.7%. And savings account, maximum you will get 1.25% with the best accounts that you can get, at Capital One or American Express Savings or any other savings bank. So 4.1% is almost triple of this 1.25 yield that you're going to get. And this is going to increase because if the companies are going to make more money, they are going to give more and more dividends. So since they have to distribute 80 to 90% of the dividend, so I think in the low interest rate environment, it's a major catalyst. And Fed has mentioned that it's planning to keep the interest rate to zero for another 2 years at least. So these yields are not going to go up. So it's going to stay there, but this yield can go up, because the companies are going to make money and they're going to distribute the dividends, right? So I think it's a very safe bet, it's a very good dividend yield ETF. VNQ, again, as I said, what I like about this ETF is it's a very low expense ratio. So what it means, 2%, every $1,000 that you put in this ETF, only $1.2 goes to commission for Vanguard. Rest of the $999 goes into the stocks which this ETF holds, which is kind of very powerful, right? I mean, if you go to mutual fund, comparable mutual fund, they will charge 1% because they're actively managing it. So basically what that means is you are going to pay basically $10 for every $1,000 invested, which is like $9 you are giving away more to the fund managers. So it doesn't make sense because this ETF is holding all the stocks are very good stocks. So I think it is very good that Vanguard and other ETFs are having very low expense ratios, which is what I like about the ETFs. Let's go to Yahoo Finance. Just a second. So VNQ, if you see, ticker symbol is VNQ. If you see the yield, it is 4.1%. See, for this year, it has given returns of minus 16%, which is not good. But over a longer period of time, right, this has given a good returns. You see, in 2009, it was $30, and it has given. Don't forget, it's at $80-90, so it's almost tripled at the top. But it has given a lot of dividends also. So if you have hold it here, your dividend yield would have been like how much right now? It would have been like 8-10%, which is a very good dividend yield, right? So that's why it's a very good ETF to hold for higher dividends. If you go and look at the VNQ on Vanguard, you see its holdings. It's holding Vanguard real estate. So when you go and see this also has again American Tower, Crown Castle, and things like that. So American Tower is the highest holding, the $5 billion. So almost 10% is holding, and this is it's having a huge moat. Okay, I'll come to that. So Crown Castle is also again same as American Tower. Prologis is basically the warehousing stuff. SBA is again like these guys. Public storage, Equity Residential is the largest apartment community. Avalon Bay, largest apartment community. So these two are the highest, are the biggest apartment rental residential apartment communities it holds. It gets the rent all the time, right? I mean, it's a recurring cash flow. So it's basically like you have invested in the multi-family apartment complex, where you have the tenants and they pay you the regularly. So these are very high quality. Sam Zell owns this Equity Residential. I am very big admirer of Sam Zell. People who are living in this apartment, are basically all the tech guys like Amazon, Microsoft, etc., etc. So they make like 140, 150K per year. So it's very least. I mean, the chances are very less they are going to default on their payments. So it has some very good Realty Income Corp, again one of my favorite monthly dividend paying stock, very solid company. So it has some very good companies within that, and I like this basket. So I, rather than I go and buy each companies individually, I rather would like to buy this particular ETF. So that's why I like VNQ. Another thing is American Tower Corp, right? So and the CCI and SBA is also similar line. So what happens is, so American Tower is basically global provider wireless communication. So within US as well as it is having presence in all these 19 countries. So what is this business? The business is that for these companies, right? I mean, Verizon or AT&T, any data company, right? They need a cell phone tower, right? You might have looked at some of the cell phone towers in your area. So on their cell phone towers are basically owned by American Tower or CCI or SBAC. One of these three. It's basically a monopoly. No other player is entered in that, and these three are basically holding the market. So what happens is, they have such a pricing power. So I would call it, in Warren Buffett terms, it is economic moat. So these people are having such a big moat that for this tower, right, they will just install the instrument and then they will just rent it out to Verizon. So Verizon will pay these guys, and more the data usage, more these guys will get paid, and more and more the data usage, more and more these guys have to install the instrument on this tower, and these guys are increasing the rent like every 2-3% every year, and Verizon has to pay for that, because Verizon doesn't have any option. If it is going to discontinue, how they are going to provide data to the consumers? So it's such a huge moat it has, that this, I mean, as we looked at, the data usage is going to increase like anything. So what it means is it will need more and more instruments or cell tower equipments on these towers, and on one tower you can install only much. You cannot install this many equipments, the antennas, right? Antennas on one tower. So what's going to happen is, eventually they are going to have less and less space as more demand comes in. So when it's a demand supply issue, then you have a less supply and you have more demand. So what happens in that case? We all know the price gets increased. So these people, I feel that they are going to increase the prices even at a faster pace, not 3% but 5%. And what does that mean? These people are going to have such a big, huge earnings. Huge earnings means these are REITs. They are going to pay out 80% of the cash flow as a dividend. So what happens is that 4.1% dividend yield that you saw, right? That's going to even increase. So I think it's a very good bet. Diversification, I would say, apart other than the other normal stocks that you buy, individual stocks for growth. This is something that you safeguard you and a regular income. So that's why I like this a lot. And other thing I wanted to show is, right, so the AMT, right, so what I use Dataroma to track what my gurus, right, are buying. So gurus mean the hedge fund managers. So when you put in AMT, right, and Dataroma, see who you got, Chuck Akre. I am a big admirer of this guy. This guy has made so much money and he's such a good investor. You see, it's a top holding for this guy. It's like he's having how much? He's having the 1.5 billion, and if you have seen some of his videos, this has been a 100 bagger for him. He bought it at like $10, I think, $10 or $20. Look at this guy's holdings: American Tower, MasterCard, Visa, SBAC, which again this in this business. Look at this guy's performance; it's just amazing. And you want to know what price he has been buying AMT? Look at this, guys. It is $143. He's owning actually more than that. Dataroma is not showing the data for more than 10 years. But look at this. He's hold on to this stock, I mean, he's made such a big money in this one, and he's still holding it. He's reduced it little bit, but then you see he is not selling much. He's not selling much. In fact, when it is going down, he is adding it. So I mean, I really like Chakakre's, investment philosophy. You can see some of his videos on YouTube, and you will see that this guy is just, just brilliant guy. Look at the Mastercard. Mastercard, if you see, he's buying Mastercard from $25. Today it is like $300. This guy is I'm telling you guys, he's a genius. I track his holdings very, very closely every quarter, and I see what he's buying, what he's not, and then do analysis from there, right? So I really like Chakakra's investment philosophy. The second one is CCI, right? If you see CCI, right, Bill Gates is owning that. So Bill Gates, if you see Bill Gates portfolio, right, that's again concentrated portfolio. But look at Bill Gates, he is not sold a single share of this CCI. Look at this, when he's buying $36 at 2007, and right now it is $150. So these guys are riding this pretty smart guy, right? I mean, we all know how smart Bill Gates is, and look at this. He's bought it and he's never sold a single share. He's owning like how many 5 million shares of this company. So you got to see these guys, where these guys are investing money, and and all three, right? And all three are part of this ETF. So that's why I like this ETF a lot. It has different, so it has basically a multifamily residential apartment REITs. It has the warehousing REITs. It has the cell tower REITs. And it has some of the commercial real estate REITs which I basically don't like some of them, but then those are not the big percentage of that. The big ones are the ones that we talked about. So I think this REIT is just going to do very well in next decade. I'm very bullish on this REIT. And how I invest in this. So as I told you, I'll disclose whether I invest in this in the things that I cover or not. So I do invest in VNQ, and I invest it on a SIP basis. So SIP means every month systematic investment plan. So I invest it in every month. So I put around 15 to 20% in this one. So let's say if I'm investing $500 per month in a market, $100 will go to VNQ, and I'm doing it every month. I bought it when it was 85. I bought it when it was 70. I bought it when it is 75. So it's basically dollar cost averaging, right? Every month I'm just buying it. So on an average, sometimes if the price is high, it will buy less. Sometimes the price is low, it will buy more units. So I think I'm very bullish on this particular ETF. I think low interest rates are here to stay, and in that scenario, this ETF giving 4.1% yield is a very good diversification, I would say. So that's it for today. I request you guys to please like my videos if you really think that I am giving a lot of information. And also please subscribe to my channel, right? It gives me a lot of encouragement to make these videos. I put a lot of effort, a lot of reading, lot of watching of videos of some of my favorite people like Chakakre or Bill Gates or Monish Pabrai or all these people that I admire a lot. I take their research and I try and do more dig into it, like why they bought these stocks, right? So I do a lot of research and then I make decisions and I share it with you guys, right? I mean, for your benefit. So please subscribe to my channel. I'll really appreciate if you subscribe to my channel. Thank you guys.